When it comes to having a debit card that can build your credit score, there are a few that do just that, but there are a few caveats. Now, looking at your regular financial institutions, your banks, your credit unions, most of them are not going to have credit building debit cards. That is right, guys. Not a credit card itself, but it is debit cards that do build your credit. Now, are they worth it? That is what we're going to be breaking down today, guys. Now, overall, when you look at Extra, when you look at Sesame Cash, when you look at Fizz, these are credit building debit cards, and they do it in a very, very unique way, meaning that when you deposit money into an account, they give you that spending limit, which is on the card in a checking account. So in traditional banks, you put money into your checking account, you can utilize the money that is on that checking account. But what they do is they actually give you a card that has the money essentially linked to a checking account. So they are two separate products. And after doing some research, it was kind of interesting to see how they do this. So let's say, for instance, I put $1,000 into my checking account. They will give me a card that is almost like a prepaid card that I can use that money that is essentially in that checking account. So I go and I use my card, I spend $500 on that card. They are going to move the money from my checking account over to that card in the amount of $500 because that is what I spent on the card. So again, it is two separate products for these institutions that are doing this. Some of the things with that, guys, one, there are fees for the accounts. Two, there are fees for a majority of the transfers, which can take up to 1.35% from doing my research. In addition, this will build your credit. On this channel, I make videos about finance, investing, making money, and financial literacy because I know we all want to be financial free. If you like the content that I provide, please consider subscribing to the channel so we can help increase the reach to other individuals that can use my help. Now, looking at Sesame Cash, they do kind of the same thing, except they use a line of credit that you access. So again, versus having a credit card, is they use a secured line of credit. So again, same scenario. You put $1,000 in this secured line of credit, they give you a line of credit or a spending limit that has that $1,000 limit. If you default or if you do not pay that line of credit, they are just going to use the money that they have already secured for you. So this does take some upfront cash to actually utilize. In addition, guys, there are monthly fees with this as well, meaning there are point of sale transaction fees, and there is a $9.99 monthly fee depending on how much you keep in the account. So if you just have a couple $100, or like a majority of Americans, 46% to be precise, are living paycheck to paycheck, now that results in fees that you could accumulate without keeping those higher balances in there. Now, one of the perks with that Sesame Cash is you do get cashback rewards from your debit card, which is kind of crazy. Plus, you can get your paycheck up to 2 days earlier, which a majority of people see as a benefit. The last one we look at, guys, is Fizz. This is a much simpler one, and there's no fees for it, but it is only working for iOS. Now, there is no Android version. Again, these are really the three that I wanted to look into. This is, again, your purchases are essentially prepaid. So you're putting money into an account and then you're paying it off on a monthly basis. You can do it as a direct deposit. You can do it as an auto pay. So you can also pay it manually. Now, this is kind of interesting because they give you a very low, roughly $500 spending limit. If you fail to make your daily payments, is what they said, you have to make sure that you make the payments in there and you're making them on a regular basis, is kind of what I understood from Fizz. And then, of course, at the end of every month, they're going to report your activity to the credit bureau to make sure that you're building up your credit. So does it really work? Now, out of everyone that they surveyed, 2,100 people, the average increase was 48 points. Now, that might sound pretty good, but overall, this is something that you can do with the majority of financial institutions without the association with fees and increasing it for literally free. There's a lot of credit counseling services. There's certified financial counselors like I am that will do the exact same thing that they're working with here, and how they're doing it, the methodology of taking the money up front to give you a line of credit. In my institution, we call it a secured card. So if you have poor credit, damaged credit, no credit, you can actually give us $500, $1,000, whatever you want your limit to be. We will replace it with a secured card with that same limit. So again, using our scenario, you put $1,000 into an account. I give you a card that has a $1,000 limit. It is a credit card technically, but it is a secured credit card. And this is going to be monthly payments depending on your balance. If you're paying it off every month, you don't pay interest. And also there are no fees. There's no requirements. There's no cost for this. It is a much better, cheaper, more established option than some of what these institutions are doing. Most people with a job can get a credit card for free. When you look at Capital One, when you look at Chase, most of them will give you a $500 card just for the instance of, even if it does go south, the limited liability of the $500 limit. Again, Capital One will really give it to anybody, from my understanding, that if you apply for it with a $500 limit, as long as you're working, and that is one of the caveats, guys, legally, we cannot lend to you if you are not working. So if you do not have the ability to repay the loan that you're taking, then you have to, regardless of what you do, but you have to have a job to get a loan. And a lot of people, again, that's kind of a silly question that I get, but a lot of people do ask or come in and do an application for a loan. Where do you currently work? Why don't have a job? I've been out of a job for a couple months, but I need money to make my monthly payments. Then that begs the question of, how are you going to pay back the loan that you're borrowing because you don't have a job? This can be a multitude of ways. We've seen anything from DoorDash to delivery services, to working part-time, to whatever you can do to make money, guys. And a majority of people nowadays do have some sort of side hustle. They have some sort of work, but a lot of times you have to make sure that it doesn't replace essentially what you're doing till you get to the point of having the ability to replace it. So getting back to the point, guys, do credit building cards work? Debit building credit cards, they do work, but they come with a fee, which is something that I absolutely want to avoid. You don't want to be paying, $10, $20, $30 a month just for carrying a card to build your credit, which again, a lot of institutions will do it for absolutely free. Or if you do have to put money up front to secure that, again, based on your payment history, based on the balances you're carrying. For most of the secured cards, if you put that $1,000 up front, they give you the card with that $1,000 limit. After about 12 months of good payment history, guess what? You get that $1,000 back, and they just leave you with the card that has that $1,000 limit. So are they effective? Can they be used? Yes. Are there better ways to do it? Absolutely. When you look at some of the programs that they have with debit cards, and again, getting a traditional credit card for most institutions is not, and will not be incredibly difficult. Why? Because institutions are in the process, or in literally the financial sector, to make money. If they're taking a bigger risk on you, if they're giving you a higher rate because of the bigger risk, that is a factor, and that is the trade-off that they'll do. Where you look at some of the credit cards running 22, 24, 30% interest, if you have a card that has a 30% interest, the chances are the possibility of you not paying that card is a little bit higher. That's why your interest is much higher. As in a result, depending on your credit, higher credit score, lower credit rate, which is good because then you'll have a lower interest rate on the credit card just based on the score. So, all right, guys, let me know in the comments what you guys think about debit cards to build your credit, and I'll catch you in the next video.